Good morning, students. This is CA Vibhavadhavan, and good morning, all of you. Good morning, Alo. Good morning, Jash, Jyoti, Priyanka. All right, so we are starting with cost accounting system today, and a lot of things to learn, lot of new things to learn for how we actually maintain the cost record. So we have learned the computation. You must have learned all sorts of computation in the material and the labor and overheads. You must have covered the cost sheet. You must have covered. Now we have to see how we make the cost accounting records. So we make the cost accounting record. There's a system we have to follow, how we basically prepare the cost accounting system. So let us start the cost accounting system today. So in cost accounting system, cost books are basically maintained under two systems, non-integrated and integrated, where cost and financial accounts are maintained in a combined way. That means we combine the cost and financial accounts, both of the accounts, then we call it as integrated. While if the records are maintained separately, the system is called non-integrated. Yeah. While non-integrated system necessitates reconciliation between financial and cost accounts, no reconciliation is required under integrated. So see what happens in financial accounting, what accounts we make? We make profit or loss account, we make trading account, we make balance sheet. In cost accounts, why cost accounts are required? Because there is a lot of computation we do under cost accounting. So we cannot merge everything in financial accounting. The purpose, the objective of cost accounting and financial accounting are different. All right. The purpose of financial accounting is more towards, calculation of net profit, maximization of wealth, of shareholders' wealth, of the owner's capital. The purpose of cost accounting is cost computation of cost and also the control of cost. So we have to have a different system in cost accounting so that we can monitor it, we can track every element of cost, and we can control at every level of costing. For that, we require a cost accounting system also. So now we have to keep a separate set of financial accounts. We have to keep a separate set of cost accounts. So sometimes if we keep it separately, it's called non-integrated. So financial accounts, we also prepare trading, profit or loss account and balance sheet, and parallelly we are making cost accounting records also. So we have different ledger accounts, we have different accounts we maintain under the ledger format, and different control accounts we make. So this is how we keep separate set of books for cost and financial accounting parallelly. They run parallel. All right. But when we keep the cost accounting records and the financial records in one system, that is we call as integrated system. So we integrate the cost records and the financial record. We make only one set of books, and there all sorts of cost and financial entries are recorded. Of course, there are many ledger accounts and the cost accounting also, financial accounting also. So system is one. The set of records are one. All right. So that is integrated and non-integrated. So if we are keeping integrated, that means cost and financial accounts are recorded together. So we don't have to reconcile anything. Profit will be one only. But when we maintain separate set of books, we maintain a non-integrated system. Integration is what? Integration is combining. Non-integrated means separate. So when we maintain a separate set of books for cost account and financial account, that means we come up with two profits. One profit as per the cost accounts and one profit as per the financial accounts. So we cannot take two profits, then we reconcile. All right. So there is a need for reconciliation. So reconciliation arises only when there are separate set of books. It's not required under integrated system. I'm repeating, reconciliation of cost records and financial records are required only when we keep separate set of books. All right. There's no need for reconciliation when we maintain integrated system. Right? I hope you must have done the bank reconciliation where we reconcile the balances of cash and bank balances, right? Similarly, here also, we'll reconcile the profits as per cost records and profit as per financial records. So we'll have two value of profits and we'll be reconciling. So a lot of learning in this session, and let us proceed. So non-integrated system. So we basically maintain the ledgers under non-integrated. We are starting with non-integrated. That means cost and financial records separately. We maintain ledgers. Under ledgers, we maintain different sort of accounts. So cost ledger, then stores ledger, then WIP ledger, then finished goods ledger. So we make the ledger, and under ledger, we make a lot of accounts. All right. Let me just, any queries before I proceed? Okay. Cost sheet is part of cost accounting, Danish. Okay, let me just explain you the process. Before, only then we'll be coming to the ledgers. See what happens. I'm just giving you the overview so that you understand what will be following in this session. All right. So this overview is important to make you learn what we'll be learning in the following session. All right. See, there are material. There is labor. I hope you know the elements of cost: material, labor, and expenses. So elements of cost are material, labor, and expenses. Now these are direct also and indirect also. Clear? Direct material will go to WIP, which is called as work in progress account. This is actually the production account where all the cost will be booked and cost of production will be calculated. So this is a very important account which we call as WIP account. That is the production account. It's the main production account where every cost will be transferred to calculate the total cost of a product or a job. All right. So direct will go to, so direct material, direct labor, direct expenses will go to WIP account. WIP is work in process. Indirect, I hope by now you must have done overheads. So indirect are also called as overheads. And I hope you know there are three types of overheads: production overhead, administration overhead, and selling and distribution overhead. All right. So direct material, direct labor, direct expenses will go to WIP. Indirect expenses, indirect, everything indirect, whether it's a material or a labor or expense, will go to overheads. All right. So we have WIP account, we have production overhead account, we have admin overhead account, we have sales and distribution overhead account. Material control account. So we have material control account, which we also call as stores ledger account. All right. Labor, we call as wages control account. So I'm just giving you the overview. We'll be going back to the slides and then we'll understand it in a better way. But the overview is important to understand the process of it. Expenses also direct and indirect. So material, so this is one account. Labor, that means wages account will be there. Wages means direct and indirect both. So all the three elements of cost, the direct will be allocated to WIP, which we call as production account. Indirect will go to three overheads, respective overheads. All right. And whatever comes from outside, that means whatever basically deals with the payment or the purchases, whatever comes outside is controlled through cost ledger control account. So cost control account is there. Cost ledger control account is basically formed to take care of anything to cover the double entry system. Clear? So basically, we are making a non-integrated system. So anything for material, we are purchasing the material from outside. We are paying the labor charges for any purchase, for any payment, whether material, whether labor, whether expenses, whatever is entering into the cost accounting records will be through cost ledger control account. So because we have to pass a double entry, whenever we are making accounts, we have to pass a double entry, all right, debit and a credit. So if the material, labor and expenses will be debited or credited, what will be the other aspect? Because we are not integrating with financial account. So basically to cover up the double entry system, cost ledger control account is open, and then we coordinate with all the rest of the accounts with cost ledger control account. Now we have to charge everything to production. So WIP is one major account where that is the first landmark you must have done in the cost sheet. It will cover all the production account. Now overheads have to be absorbed. You must have done overheads. Overheads have to be absorbed. So if the overheads have to be absorbed, production overheads will be absorbed to WIP. Admin overheads will be absorbed in finished goods control account. All right. So first landmark WIP, second finished goods control account. Admin overheads will be absorbed and the finished goods control account. Selling and distribution overheads will be absorbed under cost of sales. Cost of sales control account. So this is the whole basically process of it. So starting with material labor expenses, direct will be going to WIP account, indirect will be going to respective overheads account, and to summarize it further, WIP basically will be, it is the production account, whatever cost of producing the finished goods. It will transfer the cost of finished goods to finished goods control account. Admin overheads also will be transferring to finished goods control account. So this will give you, WIP will give you cost of goods manufactured. Clear? Finished goods control account is going to give you cost of goods sold. All right. And then finished goods control account will be transferred, cost of goods sold will be transferred to cost of sales control account, and selling overheads also will be transferred to cost of sales account, and they will be transferring to costing profit or loss account for sales, for cost of sales. Clear? And the cost ledger control account. The cost ledger control account will be transferring the sales to costing and profit or loss account. It will be transferring the sales. So anything relating with the outside of cost accounting will be handled by cost ledger control account. And this is the whole internal process of cost accounting. This is the whole internal process of cost accounting. And this is basically coming from outside. So whatever is coming from outside, purchases of raw material or any payment will be handled by cost ledger control account, covering the double entry. All right. So now we'll be moving to the presentation again so that you will be able to understand. Cost ledger, this is the principal ledger. All right. I'll just explain you also side by side. Okay. Cost ledger is basically the principal ledger in which the impersonal accounts are recorded. This ledger is made self-balancing by maintaining therein a control account for each subsidiary ledger. Now, stores ledger, I told you, it just deals with material, direct and indirect both. So stores ledger contains an account for each item of stores. Any material, whether direct or indirect, has to pass through stores ledger. All right. So for example, if I'm purchasing material, normally which entry we pass? Purchases account debit to bank or to cash or to creditor. Clear? This is the financial account entry. Purchases account debit to bank or cash or creditor. But here we are not integrating the financial accounting. We cannot post it. We are not making a cash or a bank account or a personal account. We are not making any personal account in cost accounting records. We don't make any personal account, creditor, debtor accounts, we don't maintain. So how we are going to cover the double entry? Material account debit or purchases account debit. So that's okay. Purchases are material, that will be debiting. But what is the credit? We cannot credit bank or cash or creditor in cost accounting record. So we'll be crediting cost ledger control account. That means cost ledger control account is created just to make the double entry. All right. So it is the bridge between the cost accounting and the financial accounting, the connecting link. Because this is non-integrated system. We cannot open any financial account here. We cannot open any bank account or cash account or creditor or debtor account here. But then how to pass the double entry when we cannot credit or debit bank or cash or creditor or debtor? So that means for that accounts, for those accounts, we have to debit or credit cost ledger control account. So if you are purchasing the material, stores ledger account debit to cost ledger control account. Clear? WIP account, it is also known as the job ledger. It contains accounts of unfinished jobs and processes. So whatever manufacturing is happening on a product or a job, every manufacturing, cost accounting records will only focus on manufacturing or production or the factory expenses. Anything which is non-factory, non-production will not be recorded in the cost accounting records. Clear? Meaning thereby, if let us say we are taking any loan, so we are paying interest on loan. That is a financial expense. That is not a cost expense. Clear? So interest on loan or dividends paid or interest on investments or profit on sale of any asset. So that is not going to come under cost records. In cost accounting system, only those entries are going to come that is related with production or factory. That's it. Any non-production or non-factory expense which is not related to the cost of a product or a job will not be covered under cost accounting system. Clear? So there is a need for reconciliation, because in financial accounting, we include everything: production, non-production, financial, non-financial, everything. But in cost accounting, we only focus on the cost of a product or a job. Anything which is incurred on that and because of that, material, labor, expenses, overhead, factory, admin, selling and distribution, any financial nature expense, any profit or loss on assets or any liability is not recorded in the cost accounting system. The W work in progress ledger is also a job ledger. As I told you, anything which is incurred on the production of a product or basically for a job, then everything is compiled in a work in process ledger. Or material cost, wages, overheads for each job in process are posted to the respective job account. Finished goods is contained an account for each item of finished product manufactured. So finished goods ledger will have it will have the cost of production from WIP ledger. From WIP, it will be transferred to finished goods. Finished goods will be transferring to cost of sales. All right. So once we'll do the question, you will understand it better. So there are the ledgers. Now the main accounts which we open. All right. Cost ledger control account. We also call it as general ledger adjustment account, GL account. All right. So cost ledger or general ledger, both meaning the same, is basically to complete the double entry. That is important. As I told you, let us say we are paying wages. So normally what's the entry? Wages account debit to cash. Now, we cannot credit cash in cost accounting system because cash account we don't open. So in spite of writing cash, we will credit cost ledger control account. So cost ledger control account is a bridge between financial and cost accounting, and we actually create this account to complete the double entry. So wages account debit will remain the same, but the credit will be cost ledger control account. All right. All items of expenditure are credited to this account and debited to the respective accounts. Clear? So wages account debit to cost ledger control account. So wages will be credited in the cost ledger control account. That exactly it is meaning by this. Purchases account debit to cost ledger control account. So cost ledger control account is completing the double entry. Net profit or loss from costing profit or loss account is also transferred to this account. The balance in this account represents the net total of all the balances of impersonal account. We only make impersonal accounts in cost accounting system. No debtors or creditors account we open here. Stores ledger control account is for every purchase is debited for all the purchase of material. Any material, direct or indirect, it is a one account for every type of material. All right. The balance in this account indicates the total balance of all individual stores accounts. So abnormal loss or gain also we transfer it to costing profit or loss account. So entries are made on the basis of goods received note and stores requisition. So whatever we are purchasing from outside, whether direct material or indirect material, every purchase we have to debit in the store's ledger control account. And from the store's ledger, materials will be issued for production, for all the direct material, all the indirect material will be issued from store's ledger only. So every purchase will be debited and every issue will be credited to this account. All right. Wages control account. So wages control account is a single head account for every type of wage, direct or indirect. Clear? So whenever we are incurring the wages, we are paying the wages, we will debit it. Whenever we'll be absorbing the wages and transferring it to respective control accounts, like direct wages will be going to WIP, that is a production account. Indirect will be going to overheads account, production control account, admin control account, selling and distribution. Okay. Manufacturing, production, works, factory overhead control account. So these are the overheads account. Again, whenever we'll be incurring the indirect cost of production, indirect expenses, we'll be debiting it. And whenever we'll be absorbing it, overheads are always absorbed. So when we are incurring the overheads, we will debit these accounts. Whenever we'll be absorbing the overheads, we'll be crediting these accounts. All right. Then work in process control account. I told you this is the production account. It will be debited with the total cost of production, direct material, direct labor, direct expenses, indirect expenses, production overhead expense. Clear? The admin will be transferred to finished goods. The selling and distribution will be transferred to cost of sales. So all the three overheads will be absorbed to three different accounts. I'm repeating. Production overhead will be absorbed in WIP. Administration overhead will be absorbed in finished goods. And selling and distribution overheads will be absorbed to cost of sales. Exactly if you remember the format of the cost sheet. You remember WIP, then finished goods, and then your cost of sales. So admin overhead control account, it will be debited whenever it is incurred and credited with overhead recovered. So admin overhead basically will be transferred to WIP account. And then finished goods control account, it will be debited with the value of goods transferred from WIP account. So WIP account will give you the cost of goods manufactured, and it will be transferred to finished goods control account. The balance, the final balance of finished goods control account, the output of finished goods control account is cost of goods sold. Clear? The output of WIP account is cost of goods manufactured. The output of finished goods control account is cost of goods sold. So the balance of WIP will be transferred to finished goods. The balance of finished goods will be transferred to cost of sales account. From cost of sales, it will go to costing profit or loss account. So this is the whole sequence we'll be learning. Selling and distribution account will be debited when it is incurred and credited when it is absorbed, and it is transferred to cost of sales account. So cost of sales account, it will be debited with the cost of goods transferred from finished goods to cost of sales. Clear? And general administration overhead or selling and distribution overhead. So if any admin overheads are also absorbed to cost of sales, it will be transferred here. Selling and distribution is always transferred to cost of sales only. Yeah. So it will be ultimately transferred. The output of cost of sales will be transferred to sales account or costing profit or loss account. Costing profit or loss account will have all sorts of transfers from cost of sales. So cost of sales will be transferred to costing profit or loss account from cost of sales, and the sales will be transferred through from cost ledger control account. Yeah. Overhead adjustment account. So overheads are either over-absorbed or under-absorbed. We'll be learning how we have to do this. So these are the scheme of entries we'll be doing. Okay. Sanjay, difference between cost account and financial account. I hope you know what are financial accounts. We make trading account, we make profit or loss account, we make the balance sheet. In cost accounting, we don't make trading account and profit or loss account. We make different type of accounts. We make stores ledger account, we make all these accounts which we have just discussed, the wages control, the overheads control account, finished goods control account. So there are different set of accounts under cost accounting and financial accounting, totally different set of accounts. Clear? And we'll be learning the cost accounting accounts today. No prime cost. Slide is not clearly visible. To me, it's very, very clear. I think there must be some problem with your system. Yes, Dhyanesh, exactly. When we are making cash purchase will be debited under both the accounts, but the credit is, we cannot credit cash under cost accounting system. In spite of cash, we'll be crediting the cost ledger control account. Clear? Yes, extraordinary items we don't record. It will be tallied. No, golden rule of accounts are not exactly applicable in totality. It's just that we follow the double entry system, but not there could be different methods of depreciation under financial accounting and different for cost accounting. So cost accounting has its own rules. It does not follow in totality all the cost accounting rules and regulations. All right. So let us see how it's worked and how the journal entries are passed. Now, when we purchase the material, whether credit or cash, in financial accounting, what would have been the entry? Material account debit or purchases account debit to cash or bank or creditor. But here we cannot credit cash or bank. So material control account, we can write stores ledger also. Stores ledger control account or material control account to cost ledger control account. So we are not writing here cash or creditor or bank. We cannot write here. So we have to complete the double entry. If we cannot credit cash or bank or creditor, how we are going to complete the double entry? So cost ledger control account basically helps in completing the double entry. The material control account, or you can write stores ledger control account also. So stores ledger control account debit to cost ledger control account, 5,000 and 5,000. Now stores ledger to material control. So ultimately it's transferring to stores ledger. So we can pass just one entry on this stores ledger control account to material because it's actually getting cancelled only. So one entry can be passed in spite of these two journal entries. That could be stores ledger control account debit to cost ledger control account. I'm repeating, in spite of the two entries, we can only pass one entry. Stores ledger control account debit to cost ledger control account. So stores ledger control account is purchases only, and cost ledger control account is credited in place of cash or bank or creditor. Clear? Moving to the next entry, we are purchasing worth rupees 500 for special job. That means we are directly purchasing for the special job. We are not purchasing to keep it in stock. If we are purchasing it as an inventory, listen very carefully. If we are purchasing it as an inventory, we'll be transferring to stores ledger control account to cost ledger control account. But if we are purchasing directly for a product or a job, it will directly go to WIP. It is not a purchase for inventory. It's a direct purchase for a particular job. So it will directly be going to the production account, which is WIP account. It will not pass through stores ledger. All right. I hope you must have understood this. So something which is purchasing directly for a job, that means it has to go directly to the production account. It's not a purchase to maintain inventory, but for directly for production. So cost ledger control account is credited in place of cash or bank or creditor. Clear? So cost ledger control account, again, I'm saying it is just recorded. It is just open to complete the double entry. Material return to vendor. So cost ledger, it's just the reverse entry. When we purchase material, what entry we pass? Stores ledger control account to cost ledger. When we are returning it back, it will be cost ledger to stores ledger. So just the reverse. Material directly issued to production. So any material, direct material. It's not material directly, it's direct material. So every direct material, direct labor, direct expenses has to go to WIP account. All right. So now material is being issued from stores ledger to WIP. So whatever account is receiving will be debited. Whatever account is giving will be credited. Clear? So WIP account debit to stores ledger control account will transferring the materials from stores for production. I'm repeating, we are transferring the materials from stores to production. So WIP account will be debited and stores ledger will be credited. So stores ledger account will be debited for all purchases. Stores ledger account will be credited for every issue of material to any department, right? Indirect material issued to production. Indirect material, that means overheads. Indirect material will be going to production overhead control account. It's going to production. Indirect material production, that means it's a production overhead control account to stores ledger. Again, from stores, the material is being issued to production department, indirect material. So direct material will go to WIP, indirect material will go to production overhead, and stores ledger will be credited because it is issuing the material to every department. All right. Once you will do Jayan, then you will understand. All right. Now, material return 200, return from shop to stores. All right. That means from the WIP, the production account, from the factory area, the production area, it is returned back to the stores. So stores ledger, again, it is receiving the material. So now stores ledger will be debited, and WIP, the material is coming from WIP. It is being returned. So WIP will be credited. So stores ledger is receiving the materials back from the shop. Stores from shop. Shop means the production, the factory area, the WIP, where actual production is going on. So stores ledger is receiving the materials back. It has been returned from WIP. So stores ledger debit to WIP credit. Material worth 100 is transferred from job 1 to job 2. So it will not affect or impact the stores ledger account. So job 2 is receiving the material, it will be debited. Job 1 is issuing the material, it is transferring the material, so it is credited. So job 2 account debit to job 1 account. No control account is getting affected because of this. It's an internal transfer in the WIP account. I'm repeating. It's the internal transfer in the production area or the shop area. The stores ledger or any other control account has nothing to do with it. It's an internal transfer from one job to another. So whatever job is receiving the material will be debited. Whatever job is transferring the material will be credited. Material worth rupees 100 is issued from stores. Stores means stores ledger will be credited. For repairs, repairs means production overhead control account. So repairs we are transferring to production overhead control account. So every indirect material will be transferred to production overhead. If it is going for production, every direct material will be transferred to WIP. So direct material, direct labor, direct expenses will be transferred to WIP. Indirect material, indirect labor, indirect expenses will be transferred to either production or admin or selling and distribution overheads. All right. Now we are coming to labor wages. So when we are paying the wages to workers, we are making the payment, then cost ledger will come into picture. Whenever the entry is for purchase or payment, then the cost ledger will be opened for completing the double entry. So wages in financial accounts, what entry we must have passed? Wages account debit to cash. Here, wages control account debit, because wages account we don't open, we open the control account. Wages control account is just as equivalent to wages account. Wages control account debit to cost ledger. So in place of cash or bank, we are crediting the cost ledger. Now, indirect wages also we are paying. So indirect again, wages account is account for both direct and indirect. Wages account is an account for both direct and indirect. To cost ledger control account, we are paying indirect wages. Now, indirect will be transferred to production overhead. Indirect wages will be transferred to production overhead. So production overhead control account debit to wages control account. Clear? Indirect wages paid to workers in administration. So first of all, we will have to make the entry for payment. Wages control account debit to cost ledger. Now transfer these wages to admin overhead account. So admin overhead control account debit to wages control account. So first we have to pass the entry for payment of wages, and then we have to pass the entry for transferring of these overheads to indirect wages to admin overhead control account. So wherever they have to be transferred, you have to transfer to their respective account. If indirect wages will be transferred to production, it will be transferred to factory overhead. If it is transferred to administration, it will be transferred to admin overhead. If it has to be transferred to selling and distribution, it will be transferred to selling and distribution overhead. right? Indirect wages paid to selling and distribution. So first you have to make the payment, wages control to cost ledger. This is for the payment. And the second entry is for transferring or absorbing the indirect wages to selling and distribution overhead. So indirect is transferring to selling and distribution overhead account. Direct wages will be transferred to WIP account. Okay. Direct expenses for a particular job. For a particular job will directly go to WIP control account. Direct expenses is always for a particular job. It will directly go to WIP account. Indirect expenses will go to either production or admin or selling and distribution. Clear? Direct, anything direct will go to WIP. That is for sure. Now overheads. So we have three overheads. Production. Now these overheads are incurred. That means indirect expenses, payment of indirect expenses incurred. That means we are paying indirect expenses, production, admin, and selling and distribution. All three are overheads. Overheads means indirect expenses. It will be incurred, so to cost ledger control account. So it is the entry at the first stage whenever they are incurred. Now they are absorbed. Any carriage inward, it's going directly to factory. So we are charging to production control account to cost ledger. Production account is recovered on WIP. I explained you. Production overhead will be absorbed to WIP account. So WIP to production overhead. I'm repeating. Production, see, all the three overheads will be absorbed now. Production overhead will be absorbed to WIP. Admin overhead will be absorbed to finished goods. Selling and distribution will be absorbed to cost of sales. So we are starting the absorption of overheads. Overheads are always absorbed. All right. And direct expenses or direct cost is always allocated. So production overhead is absorbed or recovered on the WIP. So WIP debit to production overhead control account. Admin overhead is always recovered to finished goods ledger. So finished goods ledger control account to admin. They are finished. Administrative overheads are absorbed to finished goods. Selling and distribution are absorbed to cost of sales. Clear? So under and over recovery we'll be doing once we do the question. Any under and over recovery can be transferred to profit or loss account, or we can leave a balance also. Buy balance carried down or to balance carried down. Clear? So this is a cost ledger control account. We are transferring the sales from cost ledger to costing profit or loss account. And then a profit or loss again will be transferred back to cost ledger control account. Clear? So this is the process also you can see. Material, wages. So direct material will go to WIP. Wages again will go to WIP. Production overhead will be absorbed under WIP. Admin overhead will be absorbed to finished goods. Selling and distribution will be absorbed to cost of sales. So three overheads are there. And WIP will be the production account, the cost of production. So this account will give cost of goods manufactured. This will be going to give cost of goods sold. Clear? So cost of goods sold, then it will be transferred to cost of sales, so that it is so cost of sales is transferred to costing profit or loss account. So this is the whole process, how the cost accounting records are kept. Now let us do the question so that you will understand it better. So this is the question. You can just take note of the question here. Okay. One student has asked the difference materials worth from shop to stores. Material worth from shop to, so shop means WIP account. What is shop? Shop means the factory area where production is going on. Clear? So we have transferred the material from stores to shop earlier. Now must be material is not up to the specification or it is excess. So the shop is transferring back the material to the stores. So when I am issuing the material from stores to shop, the entry is shop account debit to stores. Now when the shop is returning back the material, when the material is returned back from shop to stores, which department is receiving the materials back? Stores. So stores is receiving, will debit the stores, and shop is giving the material back. So shop will be, that means WIP will be credited. Shop means WIP. So from the shop, material is returned back to the stores. So stores account debit to WIP account. All right. So whatever account is receiving, it will be debited. Whatever account is giving, it will be credited. Okay. WIP is credited. WIP should come only in direct transaction. No, it's basically returning back the materials to the stores. Okay, I hope cost of sales account balance be transferred. Cost of sales, Geet, cost of sales account will be transferred to costing profit or loss account to calculate the profit. So cost of sales will be transferred to costing profit or loss account, and the sales will be transferred from cost ledger to costing profit or loss account. So sales, now costing profit or loss account will calculate the profit. All right. How it's going to calculate the profit? It needs the sales and it needs the cost of sales. So cost of sales will be transferred from cost of sales account, and sales will be transferred from cost ledger control account. So costing profit or loss account will have both the things, sales and cost of sales, to calculate the profit. Clear? So this is a illustration. Stores ledger control account. So we have opening balances of inventory. Stores ledger must be having the opening. We have the opening inventories of the stores left in the inventory. So this is the opening balance. WIP, that means goods which are not finished, unfinished goods. So we have an opening stock of unfinished goods, which is given by WIP. Finished goods, that means goods which were not sold in the last month or last year. Finished goods are left in stock, not sold. So that is the balance. Manufacturing overhead control account has a credit balance here. That means it must be over absorbed. All right. Cost ledger control account will have a balance. So if you can see, it will always tally. This is sort of a small trial balance. So the debit and the credit balances will be tallying. So these are the transactions which are happening, and we'll pass the journal entry. Clear? First of all, so finished product at cost. Finished product at cost means which account has the output? Which account produces, you tell me, which account produces cost of goods manufactured? Which account? We have all the accounts. If you can, I'm just numbering the accounts for you. We make the stores ledger. We make the wages control account. We make the WIP account. We make the finished goods control account. We make the cost of sales account. We make the three overheads account: production overhead, then admin overhead, selling and distribution overhead, and of course the cost ledger control account. So finished product at cost. Now this is basically cost of goods manufactured. Finished product at cost. Cost of goods manufactured. Can you tell me which account, which control account will give us this figure? 2,10,835. It is the output of which account? Can I have the answer? Excellent. No, it's not finished good. It's WIP. I repeat it. I'm again repeating. WIP account is the production account. It gives you the output. The final output of WIP is cost of goods manufactured, cost of finished goods. It finishes the goods. It completes the goods. So cost of finished goods manufactured. What is the cost of finished goods that has been produced? Clear? So cost of production of finished goods is your finished product at cost, and it is the output of WIP. What is the output of finished goods control account? Cost of goods sold, COGS. Cost of goods sold. Remember, admin overheads are also transferred to finished goods, and then finished goods makes the output. So finished goods control account, the output of this account is cost of goods sold, which is transferred to cost of sales account. Clear? So finished product at cost is basically the output of WIP account, and it will be transferred to finished goods control account. So output of WIP is transferring to finished goods control account. And I told you which account is receiving will be debited, which account is transferring will be credited. Can you tell me the journal entry for the first? finished product at cost. So if I'm telling you finished product at cost means cost of goods manufactured. That means it will be transferred from WIP to finished goods. All right. Cost of production is transferred from WIP to finished goods. Can you give me the journal entry for the first one? Finished product at cost. I'm saying it is the product of WIP. So from WIP, we transfer the cost of production to finished goods for sale. So the entry will be finished goods control account to WIP account. All right. Finished goods control account debit to WIP. You can write, just look the entry over here. I just want to see the pen. Okay, pen is not highlighting here. All right. So I'm going to the second, manufacturing overhead incurred. Manufacturing, we have to do quickly the journal entry, then only we'll make the accounts. All right. So it's just a practice for the entries before we do the accounts. Manufacturing overhead incurred. Manufacturing overhead means factory overhead. So it's factory overhead or manufacturing overhead or production overhead. It's one and the same thing. I'm repeating. Manufacturing overhead or factory overhead or production overhead, it's the same thing. So manufacturing overhead incurred, what is the entry? Incurred, that means we must have made the payment. It's incurred. Clear? So manufacturing overhead, can you tell me any entry? Very good. Finished goods account to WIP. Finished good to WIP. Finished goods ledger to WIP. Yes. Can you give me the entry for manufacturing overhead incurred? It's a payment entry. If you can understand like this way, it's the payment entry. Every purchase or payment entry has to route through cost ledger control account. It's not an entry for absorption of overheads. It's an entry for incurred. Overheads are incurred. So they have just been created. So we have to create an entry through cost ledger account. Clear? So manufacturing overhead control account debit to cost ledger. Yes, Muhammad Aslam, very good. This is the entry. Manufacturing overhead account debit to cost ledger control account. Very good. Pranav, Bala, Vinodini, Kanchan, Pius, good that you are now, getting the concept. Raw material purchase. I think it's very simple. Purchase. Any purchase or payment entry has to route through cost ledger control account. All right. Any internal transfer from WIP to finished good to cost of sales. Any internal transactions, cost ledger has nothing to do. Clear? Only the entry from outside. When we have to make an entry into the cost accounting system, then cost ledger is a bridge. But once the entry is inside the cost accounting system, then cost ledger has no role to play. Clear? I'm repeating, cost ledger control account is just to bridge the complete double entry. Any purchase or payment will be routed through cost ledger. Once it is already into the cost accounting system, then cost ledger has nothing to do. Clear? So raw material purchase, yes, stores. Raw material, that means stores. So raw material account debit, stores ledger account debit to raw material purchase, stores ledger account debit to cost ledger control account. Clear? Factory wages are incurred. Factory wages, just factory wages. That means they must have been paid or not paid, whatever. Whether paid or not paid, cash or credit. There is no differentiation in cost accounting, whether cash or credit. In financial accounting, we credit cash or we credit the creditor. But in cost accounting, there is no difference between cash or credit. It's just cost ledger control account. So wages control account debit to cost ledger control account. Clear? Indirect labor, again, for indirect also, first you have to make an entry from wages control. So wages control account debit will be debited for both direct and indirect wages. I'm repeating, wages control account debit will be debited for both direct and indirect wages. Clear? Similarly, stores ledger will be debited with both direct and indirect material. So wages control account debit to cost ledger, indirect entry. Wages control account debit to cost ledger control account. Clear? Now, we can transfer it to the different overheads. Factory wages, that means it could mean the direct wages also. Let us see the entry. Wages control account debit to cost ledger and WIP debit to wages control account. Clear? So this 50,530 will be assuming the direct. 5530 will be going to which account? The production account, the WIP account. So the first entry will be wages control account debit to cost ledger control account, and now transfer these wages to WIP account. Direct wages will go to WIP. Indirect labor, wages control account debit to cost ledger, and then transfer them to production overhead. Production overhead control account debit to wages control account. Clear? We have to transfer it. Cost of sales. Any doubt so far? Yes. Very good. Very good. Wages account debit to cost ledger control account. It's not cost control, cost ledger control account debit, Pranav. Okay. So cost of sales entry. Just see cost of sales. See. Wages, the direct wages, direct and indirect both. So this is the 72 is direct and indirect both. So they have combined the entry. Both direct and indirect wages, we have first passed the entry for incurring or payment. Then the direct wages will be transferring to WIP from wages control. Indirect is transferring to manufacturing overhead from wages control. So direct wages are transferred to WIP, indirect wages are transferred to manufacturing overhead. So first we have to pass the entry for payment of wages. Then the wages control account will be transferring direct wages to WIP, indirect wages to manufacturing overhead. All right. So this is how it is to be done. Then cost of sales. Where cost of sales is going to come? Where cost of sales is going to be there? Okay, any doubt, any issues so far? Factory wages is direct wages. Bal Vinodi, factory wages is direct wages. Assume it as direct wages because indirect wages are separately given. So assume that factory wages are direct wages. Clear? Both will be going to first wages control, and then from wages control, direct will go to WIP and indirect will go to manufacturing overhead. All right. Okay. Cost of sales. Cost of sales, where is going to go? Cost of sales. Cost of sales. It will be cost of sales account will be receiving from finished goods stock account. So finished goods account will be transferring the cost of sales to cost of sales account. So cost of sales account, the product of finished goods is cost of goods sold. It will be transferred to cost of sales. So cost of sales account will be accepting it, and it will be transferred from finished goods ledger account. Clear? So this is the fifth entry. Material issued to production. Now it's a time to issue the material. We purchased the raw material initially. Now we are issuing the raw material to production. Material issued to production, where it is going to go? It will go to WIP account. Material is being issued for production. It will go to WIP account. So the entry will be WIP account debit to stores ledger control account. Material issued to production. Production means WIP account will receive it and stores account will give it. So WIP account debit to stores ledger control account. Sales returned at cost. You transferred the cost of sales from finished goods to cost of sales account. Now sales are returned at cost. Return it back to finished goods account. Return it back to finished goods account. Entry will be finished goods control account debit to cost of sales. I'm repeating. When you transferred the cost of sales to finished goods account, the entry was cost of sales account debit to finished goods. Now sales are returning at cost. So return back to finished goods account for inventory. It will be kept in inventory now again. So finished goods control account to cost of sales account. Sales returned at cost. Return it back to finished goods ledger account. Clear? Material returned to suppliers. We are returning back the material. So when we purchase the material, what entry we pass? Stores ledger to cost ledger. Stores ledger account debit to cost ledger. Material returned to suppliers, reverse the entry. Cost ledger control account debit to stores ledger. I'm repeating, when we purchase the material, we debit the stores account, we credit the cost ledger account. When we are returning back the material to suppliers, we are returning it back. So the entry will be cost ledger control account debit to stores ledger control account. Can you see this entry? Cost ledger control account debit to stores ledger control account. All right. We are returning back to the materials to suppliers. Manufacturing overhead charged to production. Manufacturing overheads go to which account? Production overhead or manufacturing overhead or factory overheads are transferred to which account? Are absorbed to which account? Can you tell me? Manufacturing overhead charged to production. That means charge means absorbed. Charge means absorbed to production. So manufacturing overhead is transferred to which account? It is absorbed to which account? Can I give an answer? Anybody who can give me this answer? Yes, very good. This is an entry for very good. Finished goods, no. Manufacturing overheads are transferred to WIP account. Very good. Muhammad Aslam, just try to understand production overhead or manufacturing overhead or factory overhead. Any terminology you can use for this. So manufacturing overheads are transferred to WIP. Administration overheads are transferred to finished goods control account, and selling and distribution overheads are transferred to cost of sales. Don't forget this. You have to note this. Clear? So manufacturing overhead charged to production. Manufacturing overheads goes to WIP. So whatever account is absorbing will be debited. Whatever account is being transferring, it will be credited. So WIP account debit to manufacturing overhead control account. Clear? So this is the entry. If you can see, WIP account debit to manufacturing overhead control account. So this is the entries we have done. Very good. It has to be WIP. Okay. Muhammad Islam, I hope you have understood this. So now there is a cost ledgers also. Now we are maintaining the accounts in ledgers. So ledger means there will be different accounts in a ledger. So ledgers are a broad term. There are many accounts which we open in ledgers. So cost ledger control account. If you can see, if I can take you back to the question. I hope you have taken the note of the question. So I'm just, so stores ledger control account, if you can see, just make the accounts now. You have to make a stores ledger control account. See, normally 8 to 9 accounts we make. What accounts we are going to make? Number 1, cost ledger control account. Number 2, stores ledger. Number 3, wages control. So material and labor, stores ledger and wages control. Material and labor, both the accounts we have opened. Third is, of course, the cost ledger. So 3 main accounts we have opened. Now the finished goods control account and the cost of sales account. Clear? And then the 3 production overheads account. The overheads account, production overhead, selling overhead, and admin overhead. Clear? So again, we are repeating: cost ledger control account, material control account, wages control account, 3, then 3 overheads, production, admin, and selling, 6 accounts, then WIP, finished goods, and cost of sales, 3 more makes it to 9 accounts. And the 10th account would be costing profit or loss account. So normally in every cost accounting non-integrated system, we make 10 accounts. We should make here and now 10 accounts depending upon the question. So these accounts, the inventory accounts will mostly have a balance. So stores ledger control account means the balance means that the inventory of material in hand. WIP means the inventory of unfinished goods. Finished stock account balance means the inventory of finished goods left which are not sold. Manufacturing overhead control account balance means something overhead absorbed, over-absorbed, or under-absorbed. And cost ledger control account, of course, it will complete the double entry. So here it will, the balance of it basically completes the debit and the credit total. All right. So you have to bring the balances. Stores, WIP, finished goods have the debit balance. Manufacturing overhead and cost ledger have the credit balance. So I'm moving to the, now you have the journal entry. We have to post it now. So I'm just, you must be having the journal entries with you. So let us just, I'm just making on the screen, I'm just focusing on the account. You must be having a journal entry. Let's focus on cost ledger control account. You just have to post the entries, clear? Cost ledger control account will always have a credit balance. Manufacturing overhead control account, this is the manufacturing overhead incurred. What entry we used to pass here? Manufacturing overhead control account debit to cost ledger. So that's why it's coming on the credit side of cost ledger. So all expenses and payments will come on the credit side of cost ledger and on the debit side of respective account. So manufacturing overhead must be the incurred. It must be incurred. Stores ledger, 1,23,000 must have been purchased. Stores ledger, we must have purchased material. So stores ledger control account debit to cost ledger control account. That's why it has come to the credit side. It will go to the debit side of stores ledger. This will go to the debit side of manufacturing overhead control account. Wages control, remember we paid the wages direct and indirect both. So wages control account debit to cost ledger. That's why it has come in the credit of cost ledger. It will go to the debit of wages control. All right. Remember, we returned back to the suppliers. So what entry we used to pass? When we return the material back to supplier, cost ledger control account debit to stores ledger. That's why cost ledger is debited and stores ledger will be credited. And this is the final balance of cost ledger control account. All right. So this is, we have completed the cost ledger control account. Similarly, now stores ledger control account. The opening balance from the question, we have got the opening balance. These were the purchases. Remember the purchases of material. The purchases of material. Stores ledger control account debit to cost ledger control account. So all the receipts of material will come on the debit side. All the issue or return of material will come on the credit side. I'm repeating. All the receipt of purchase of material will come on the debit side. All the issue of material will come on the credit side. So material issued to production, that means WIP. This is 2,900 is the material returned back to the supplier. So issue of material, return of material. And this is the closing balance of stores. That means total material. Stores ledger covers both direct and indirect material. I'm repeating. Stores ledger cover both direct and indirect material. All right. Wages control. Whenever we incur the wages, we pay the wages, we debit it. Whenever we transfer the wages, we credit it. So when we have paid the wages, wages control account debit to cost ledger control account. So this is the wages total, direct, indirect, both. I'm repeating. Wages control will be debited with both direct and indirect wages paid or incurred and credited when we transfer. Direct wages must be transferred to WIP account. Indirect wages must be transferred to manufacturing overhead control account. So wages control account debit has no balance. We paid the wages and we transfer the direct to WIP, indirect to manufacturing overhead control account. So no balance in wages control account. I hope you must be, yes. Ledger is posting of journal entries to respective account. Exactly, Dhyanesh. It's exactly the concept, exactly the process, like in financial accounting, we post the journal entry to the ledger accounts, exactly the same way we have to do. We have done the journal entries, now we are posting to the respective accounts. The only difference is these are the cost accounts, not financial accounts. Clear? Then moving to manufacturing overhead control account. So whenever manufacturing overheads are incurred, we debit it, and whenever manufacturing overheads are absorbed, we credit it. So there was already a manufacturing overhead control account. It was a credit balance from the question. It was a credit balance in the small trial balance which was given. This was manufacturing overheads incurred. Cost ledger control account, this is incurred. And the manufacturing overheads are basically transferring to the work in process control account, transferring to the production account. All right. And the balance carried down of manufacturing overhead control account. Now the work in process control account, the main production account. This is the main production account. The debit balance from the question, the original opening balance. This is the opening balance from the question. Now, we transferred the wages, the direct wages from wages control account, direct material from stores ledger account, indirect absorption. This is absorbed from the manufacturing overhead account. Clear? I'm repeating. Direct wages from wages control, material, direct material from stores ledger, and indirect material or expenses, indirect manufacturing overheads absorbed. This is absorbed. 77,200 are absorbed. Direct material and labor are directly transferred. Indirect are absorbed. All right. The output of WIP is cost of goods manufactured are transferred to finished goods control account, and the balance CD is the balance of unfinished goods. So 1,66,575 is the cost of unfinished goods which are not completed, and 2,10,835 are completed. So they are transferred to finished goods stock account. All right. So this is the WIP control, the main production account. We are moving to finished stock ledger control account. The finished stock ledger control account, the opening balance of goods unsold, opening balance of goods unsold taken from the question. Then cost of goods manufactured transfer from WIP. We just transfer it from WIP. So finished goods stock account debit to WIP account. So opening balance of unsold goods. The fresh production which is transferred. And now the output of cost of sales control account. And these were the cost of sales control. So they were returned to the sales return. Remember, sales returns. Sales returned at cost. They were sales returns at cost. So sales returns means finished stock ledger is again receiving. So this was the sales returns at cost. Finished goods is again receiving. And cost of sales, it is transferred to cost of sales control account for sell. So cost of sales control account, cost of goods has to be sold. Cost of goods sold, it will be transferred. Balance CD of this account means still these goods are unsold. Finished goods unsold. Balance CD means finished goods unsold. And whatever is the cost of goods sold is transferring to cost of sales account. I think you can see it's transferring to cost of sales account, and cost of sales account is receiving. So whatever account is receiving will be debited. Whatever account is sending will be credited. So cost finished stock will be credited and cost of sales will be debited. So this was finished stock ledger returns. So if they have, say, cost of sales have returned back the goods to finished goods, it was sales returns at cost. So cost of sales account has returned the goods which were sales returns. It has gone back to finished goods. The balance CD of cost of sales account. Now this balance CD can be transferred to costing profit or loss account. All right. So this balance, in spite of this balance CD, we can transfer it to by costing profit or loss account. Clear? Now this is the trial balance we have made. So stores ledger, the balance CD, work in progress, the balance CD, finished stock, the balance CD, manufacturing overhead, the balance CD, cost of sales again, and cost ledger control account. So cost ledger control account will always complete the double entry. So all these balances should be equal to the balance of cost ledger control account. I'm repeating, all the balances will be equal to the balance of cost ledger control account. So I'm leaving with you another question, and these are the balances. We'll come back after a break of 5-7 minutes. Please make the accounts for this question. So when I come back, you should be ready with the accounts. You should make a cost ledger control account, material control or stores ledger, wages control. So 3 accounts, 3 overheads account, then WIP, finished goods, cost of sales, 3 more, 9 accounts, and costing profit or loss account. So just make 10 ledger accounts before, be ready with those 10 ledger accounts, and I'll be joining back after the break of 5-7 minutes. All right. The question before you.
Before you start, just post the opening balances. These are the opening balances. So material control, you must have opened stores ledger control account. Stores ledger control account, 2 balance BD, 1,24,000. 2 balance BD, 1,24,000. Then post the opening balance at WIP control account, 2 balance BD. Finished goods control account, the opening balance. So all the 3 stock account, we have the opening balances. Overheads control account, we have the debit balance. Administrative overhead control account, we have the credit balance. So if it's a debit balance and then it's a credit balance, selling and distribution overheads, so all the 3 overheads control account will also have a balance. Cost ledger control account is always to basically complete the double entry. So the net balances, the net effect of these balances should be this. Clear? So before basically I take you to the illustration, we'll just let me just explain you this again, so that now since we have done some concepts, now you're able to understand. See, if it's material, so material, that means the stores ledger control account. Anything which will make an entry will be making through cost ledger control account. All right. Now direct material will go to your WIP. And indirect material will go to any of the 3 overhead, production overhead, or your admin overhead, or your selling and distribution overhead. So it is basically transferring. So whenever we are incurring the material, we are purchasing the material, stores ledger will be debited and cost ledger will be credited. And when I'm transferring the direct material to WIP and indirect to overheads account, then we will credit the stores ledger and debit the respective accounts. All right. So this is the process for material. Similarly, the process for labor. So whenever we are incurring the labor or the wages, again, both direct and indirect, here also both direct and indirect. We are purchasing material direct and indirect, both through cost ledger and transferring the direct to WIP and indirect to overheads account. All right. Similarly with wages also. Wages also, both direct and indirect will be paid through cost ledger control account only. So wages control account, they will be debited and cost ledger will be credited. Now the direct wages will be transferred to WIP and indirect wages will be transferred to any of the 3 overheads depending upon which department they are transferring. So production overhead or admin overhead or selling and distribution overhead. All right. Now coming to expenses. So if we have direct expenses, again, it will be routed first through cost ledger control account. So anything which are making an entry into the cost accounting system will be routed through cost ledger control account. And once it is inside the cost accounting system, then cost ledger control account has no role to play. Clear? Direct expenses will only go to WIP. Clear? And then there could be overheads also. So indirect expenses. Indirect expenses means any 3 overhead, production overhead and admin overhead and selling and distribution overhead. So they also can be incurred. They will be incurred first of all through CLC, cost ledger control account, and then they are directly going through the production and admin and selling and distribution. Now all the 3 overheads, they will be absorbed. Production will go to WIP. Admin will go to finished goods control account and selling and distribution will go to cost of sales. Clear? So, and WIP will be transferred to finished goods will be transferred to COS and COS will be ultimately transferred to costing P&L. So costing COS will be transferred to costing P&L and CLC will give the sales. So basically costing profit or loss account, sales are coming from here, cost of sales are coming from here, it will calculate the profit. So this is the whole sequence of it. So just have a look here again. Both direct and indirect material will be at a one head, one account through cost ledger control account. It will make an entry through cost ledger. Once it is inside the cost accounting system, direct will go here and indirect will go here. Then labor also, direct and indirect. First, it will make an entry through cost ledger control account whenever it is paid. And once it is inside the cost accounting system, then direct wages will go to WIP and indirect will go to production, admin or selling and distribution. And remember, whatever account first we are receiving it, paying it, entering it, will debit it. and once it is transferring, it will be credited. All right. Similarly, direct expenses will only go to WIP. Indirect expenses, if they are incurred, will be route through CLC, and then they will be go to the respective production accounts, the admin and selling and distribution overheads account, and then the overheads will be absorbed. Overheads will be absorbed to respective accounts, control accounts. Production is absorbed to WIP, admin is absorbed to finished goods, and selling and distribution is absorbed to cost of sales. Cost of sales will finally be transferred to costing profit or loss account, and sales is also coming from cost ledger control account, and it will calculate the profit. All right. So this is how it is done. Now coming to this, basically the question. So these are the balances. And now we have all these transactions. So just quickly take a note of these transactions. You have the accounts ready with you. We'll directly post the entries into the accounts. All right. So I'll tell you the entry also, and you directly post it into the account. Material purchase, very, very quickly you have to do now, because a lot of calculations is there in a cost accounting system. So you have to be really fast. Material purchased. Purchase means stores ledger control account debit to cost ledger control account. So in stores ledger, it will be debited, and in cost ledger, it will be credited. Clear? Again, I'm saying material purchase. We are purchasing the material. So it will be routed through cost ledger first. Okay. Take a note of this entry. Let me see if any. Okay, very good. Already you have made the accounts. Material purchase will be through cost ledger control account. All right, CLC. So stores ledger will be debited and cost ledger will be credited. Clear for the first entry. Now material purchase. Now it's the time to issue the material. Clear? Material purchase. I told you stores ledger is for both direct and indirect. Stores ledger or material control is for both direct and indirect. So we have purchased the total material first, both direct and indirect. Two jobs. Jobs means direct. Jobs means direct. So material issued to job, that means direct. Direct material will go to WIP. WIP account debit to stores ledger. So first we have purchased the materials. Now we are issuing the materials. So it will go to WIP. Clear? So WIP account debit to stores ledger. Materials to works maintenance. Works maintenance means manufacturing overhead or factory overhead, all right, or works overhead. So any terminology you can use. This is indirect. It will go to production overhead. So production overhead control account debit to stores ledger control account. Clear? So second material is being transferred to production overhead. Third material, again indirect, is transferred to admin. So admin overhead control account debit to stores ledger control account. Material to administrative, admin overhead control account debit to stores ledger control account. Then the fourth indirect material is being transferred to selling and distribution overhead control account, sales department. That means selling and distribution overheads control account. So this will give you a clear idea. First, when material was purchased, we debited the material. But after that, when material is issued, whether to WIP or to works maintenance or to admin department or to sales department, it is credited. Because when we receive the material, we debit stores ledger. When we issue the material from the stores ledger, we credit the stores ledger. So first entry, my stores ledger account debit to CLC. CLC role is over now. The moment the materials are purchased, CLC role is over. This is internal entries, internal cost accounting department. This was an external entry because the material were purchased. So for any external transaction, CLC will come into play. For every internal entry, CLC has no role to play. Clear? So all the four departments, the material is being issued. I hope you have understood now how it is to be done. Yes, production to store, admin to store, selling and distribution to store. I hope there is no doubt in this material. I hope you have understood. All right. Now come to wages. Wages direct and wages indirect. First of all, you have to pass the wages through CLC. it is, even if it is not mentioned, you have to make and see. Any expense will have to make an entry through cost ledger control account only. You cannot directly transfer the wages to WIP or overheads account. You have to first make these expenses, material or labor, have to come into the system through CLC first. So they have to pass through CLC first. So direct wages or indirect wages, both will go to wages control account, debit to CLC, both of them. Clear? So both of them, 149,300 plus 65,000. Both for both entry will be the same, wages control account debit to CLC. So first you have to make an entry through CLC. Wages control account debit to cost ledger control account. I hope you're making a posting to the accounts directly. Once we have made an entry through CLC, now you transfer the direct, the second entry, transfer the direct to WIP and indirect to production overhead. Clear? So the first entry will be wages control account debit to cost ledger control account, direct and indirect both. You can add also both the amounts and pass one entry. The second entry will be transferring the wages, the direct wages to WIP, transferring the indirect wages to production overhead. So when we are transferring the direct wages to WIP, the entry will be WIP account debit to wages control account. And for indirect, production overhead control account debit to wages control account. Clear? So these three entries can be passed. First for CLC, and the second and third entry will be transferring the wages to respective control accounts. So this is the external entry and this is for internal transfer. Clear? I hope you have understood this, students. The wages part also you have understood. Now transportation for indirect material. Transportation for indirect material will also will be routed through production overhead control account. Transportation for indirect material will go to production overhead, indirect material transportation. So it can go directly to production overhead control account through CLC first. Any expense will be routed through CLC first. So you can take directly to production overhead control account also because it is indirect material. It is a transportation, not a material. It's transportation expense. So indirect expense, you can transfer directly to production overhead. You can consider it as indirect expense. It's not an indirect material. It's an indirect expense. The entry is for transportation, not material. Clear? So the entry will be production overhead control account debit to cost ledger control account. Production overhead control account debit to cost ledger control account. Now the overheads entries are starting. First, overheads incurred. Production overheads incurred through CLC. Production overheads incurred through CLC. So what will be the entry? Production overhead account debit to CLC. Production overhead account debit to CLC. Now the production overheads are absorbed. Production overheads are absorbed to which account? Can you tell me? Production overheads are absorbed to which account? Production overheads are absorbed to which account? See, we have incurred production overheads through CLC. We have incurred means the entry. You have to bring the production overhead into the system. How it has to be brought? Through CLC first. Now internal transfer. Production overhead. Overheads have to be absorbed. Production overheads will be absorbed to which account? Which control account? I've told you many times. Can I have the answer? We have to. Very good. WIP. Very good. Production overheads will be absorbed to WIP. So entry will be WIP account debit to production overhead control account. Whichever account we are transferring to will be debited and whichever account we are transferring from will be credited. So WIP will be debited and production overheads control account will be credited. All right. So to which account we are transferring will be debited. From which account we are transferring will be credited. Clear? So WIP account, production overheads will be absorbed to WIP. Admin overheads incurred again through CLC first. So admin overheads account debit to cost ledger control account. Admin overhead account debit to cost ledger control account. Now admin overheads allocated to production. Admin overheads allocated to production. Where should I allocate admin overheads? They are allocated to production. So where I can allocate admin overheads? Allocate the admin overheads. We can allocate to finished goods control account. All right. Or we can even allocate to, say, if they are mentioning as production, we can even allocate to WIP because they are saying to production. But yes, mostly we just transfer it to finished goods control account. And admin overheads are also allocated to sales department. So you can transfer to finished goods also and to sales department. So cost of sales. Here, admin overheads are also allocated to sales department. There could be, some salesman's salary we have to pay. So admin overheads allocated to production, finished goods control account debit to admin overhead. Admin overheads allocated. Allocated means absorbed. Allocated means absorbed. Allocated to sales department. They're also allocating some part of admin to sales also. So cost of sales account debit to admin overheads control account. Now, selling and distribution overheads incurred through CLC first, and selling and distribution will be absorbed always to cost of sales. So selling and distribution overheads incurred means your selling and distribution overheads control account debit to CLC and absorbed to cost of sale. COS debit to selling and distribution overhead control account. All right. Yes. All right. So I hope you must have understood. Now, finished goods produced. Finished goods produced. Which account gives the cost of finished goods produced? I'm asking again. Finished goods produced. From which account will be transferring and which account will be receiving? Can you tell me? Finished goods produced. Finished goods produced is the output of which account? Finished goods produced. So which account will be transferring and which account will be receiving? The receiving department will be debited. The transferring department will be credited. Can you tell me the entry for finished goods produced? Finished goods produced. Can you tell me finished goods produced? Can anybody tell me finished goods produced? Finished goods produced. Which account should be debited and which account should be credited? Come on, I'm waiting for the answers. Finished goods produced. Which account should be debited and which should be credited? Which account, the output of which account is cost of goods produced? Yes. WIP credit and finished goods will be debited. Yes. Finished to WIP. Yes. So finished goods account debit and WIP account credit, because WIP will be transferring the cost of goods produced to finished goods. Finished goods will sell those goods. Clear? Finished goods account is maintaining the inventory for sale. Finished goods sold. Finished goods sold. So it will be transferred to which account to which account? Which is the transferring account and which is the receiving account? Finished goods sold. COS will be debited and finished goods will be credited. Finished goods sold. COS will be debited and finished goods will be credited. So COS will receive the cost of goods sold from finished goods control account. Sales. Which account will be debited and which account will be credited? So sales, CLC will be debited and costing profit or loss account will be credited. CLC will be debited and costing profit or loss account will be credited. You remember in profit or loss account, we always write by sales. So costing profit or loss account will be credited. All right. Yes, very good. So this is, we have done, I've told you the entries. Now you must have made the posting also to accounts. Let me now show you the accounts here. So material control account. This was the opening balance. This was the purchase, right? Cost ledger control account. We issued to production. We issued to production overhead. We issued to admin overhead. We issued to selling and distribution. And this is the closing balance of material left in stock. Clear? So these are the debit and these are the credit. Wages control. This was the total wages, direct and indirect both. Direct has gone to WIP, indirect has gone to production overhead. So wages control, generally we don't have any balance in wages control account because whatever wages are incurred, we transfer to production. And students, I hope now you are getting the idea. Now you are understanding. I'll be glad if you have understood now. Yes, cost of sales to finished goods. Sales account. Sales account will be, Mohammad Aslam, sales account will be cost ledger control account, debit to costing profit or loss account. Remember, in profit or loss account, where we post the sales? By sales account. So in profit or loss account, sales has to be credited. So costing profit or loss account will be credited and it will be coming from cost ledger control account. So cost ledger control account will be debited and costing profit or loss account will be credited. Clear? So these are the two accounts we have done. Moving forward, production overhead control account, opening balance, clear? And then the transportation of indirect material, this we incurred, all right? And this we have transferred to the WIP account. So all these production overhead, indirect wages are coming from wages control. So indirect material, indirect wages are coming from the different control accounts. So we are transferring to WIP control account. And this is the basically balance. It's under absorbed. Debit balance means under absorbed. That means these expenses should be absorbed and only this much is absorbed. So if debit side is greater, that means expenses are greater than absorbed. Expenses are greater than absorbed. This much should be absorbed, but only this much could be absorbed. It's absorbed to WIP. So these are the incurred and these are the absorbed. That means this is under absorption. So debit balance, it's written on the credit side. That means 6150 is the debit balance. It's under absorbed. Absorption is less than incurred. So it's under absorbed, right? So it can be balance carried down or it can be transferred to costing profit or loss account also. It can be transferred to costing profit or loss account also. Admin overhead. So these are basically incurred and these are absorbed. Clear? To finished goods and to cost of sales. So admin overheads are absorbed to finished goods, but in this question, they have absorbed to cost of sales also. So this is over absorption. That means absorbed are greater than incurred. Incurred are less and absorbed are greater. Right side is absorption. So absorbed is greater than incurred, so it's over absorbed. So credit balance means over absorbed. If credit side is greater, that means expenses are over absorbed. Clear? So this credit balance is over absorbed. WIP control account. So WIP control account, these are the direct material, direct labor, and these are indirect factory overheads. And it has gone to finished goods control account. This is nothing but cost of production. It is transferred to finished goods control account. If you can see here, it is coming from finished goods control account, this amount. All right. And this balance CD is unfinished goods, stock of unfinished goods. Balance CD is stock of unfinished goods. So opening balance of finished goods in stock, admin overheads absorbed to finished goods, and this will be transferred to cost of sales. So this is cost of goods sold. Clear? And this is unsold goods, unsold stock. All right. Whatever is sold, cost of goods sold is transferring to cost of sales, and this is unsold stock left in finished goods control account. Selling and distribution opening balance, and they were incurred and material, indirect material, and now it is transferring to cost of sales here. So selling and distribution will always be absorbed in cost of sales. This is coming from finished goods control account. Admin overheads also absorbed to cost of sales. Now the cost of sales is transferring to costing profit or loss account. So cost of sales will be transferring to costing profit or loss account to calculate the profit. Clear? So this is cost of costing profit or loss account. You can see this was coming from cost of sales, and say cost CLC will give the sales. Clear? So this CLC is giving the sales, and the profit will again be transferred to cost ledger control account. Clear? So opening balance, all these external entries, double entry, all these external entries, sales will be transferred to costing profit or loss account, and profit again will be transferred to cost ledger control account. So this will be the closing balance. All right. Now this balance should be equal to all other balances of debit and credit. So basically it will complete the debit and the credit total. CLC is always to bridge the balances. Clear? I hope you must have understood. We cannot say which is good or which is bad, under absorption or over absorption. But yes, if it's over absorption, that means we have increased the cost of production. So the cost was 1 lakh and we have over absorbed. So over-absorption means we have increased the cost of production. And under-absorption, see, because absorption is at a particular rate. The rate is fixed, that is standard. So standard rate is used for absorption and it cannot be close to actual overheads, here, actual expenses incurred. In costing, we absorb it, all right? And in the financial accounts, we allocate it. So over absorption means we have unnecessarily increased the cost of production. Under absorption means that cost of production is less than it should have been. So over absorption means more than actual. Under absorption means less than actual. Yeah. So the trial balance again, these are the closing balances. Closing balances of all these accounts we have made. Material control, production control. These are the overheads control. WIP, finished goods, and cost ledger. So cost ledger will be equal to all the debit, that the net effect of debit and credit balances should be equal to cost ledger control account. All right. Students, I hope you have understood this. Quickly going to the integrated system. See, integrated system, let me just tell you, it's the, if you have understood the non-integrated one, let me just explain you from the thing we have, I've explained you from there. I explained you here that the external part has to be, which account takes care of the external entry, the cost ledger control account, right? Material also, then labor also, cost ledger control account. So this is non-integrated. The integrated, the only difference, try to understand. There's the only difference between integrated and non-integrated when we talk about recording. See, this part, the right side is internal. It's all internal. And I told you, internal has nothing to do with integrated or non-integrated. Internal transfer, internal transactions between cost accounting system, that means transferring from material to WIP overheads, transferring the wages to WIP or overheads, transferring the direct expenses, transferring the overheads to finished goods, WIP or cost of sales. The internal transactions are the same in both integrated and non-integrated. The difference between integrated and non-integrated is actually to the cost ledger control account. In integrated, cost ledger control account is not opened. The general ledger adjustment account is not required. We actually pass the debit and credit, which in place of that, we open the CLC. For example, in non-integrated, when we purchase the material, what entry we pass? Material account debit to cost ledger control account. But otherwise, what should be the entry? Material account debit to cash or to bank or to creditor. So in integrated, we are integrating the financial account also and cost account also. So here we will not be crediting the CLC, but we will crediting the cash or credit or creditor or bank only. So cost ledger control account is not opened in integrated. Rest, everything is similar to non-integrated. That means once we purchase the material, the issue of material to different control accounts has no difference in integrated or non-integrated. The whole process, the transactions, the entries, the posting, the journal entries are all same. The only difference between integrated and non-integrated is we do not open cost ledger control account in integrated because we are integrating the financial and cost. We are maintaining only one set of accounts. So in integrated, the entry will be stores ledger control account. See, we are integrating. That means we have to open a cost ledger account also and financial account also. So stores ledger control account debit to cash or bank or creditor. And then we transfer the issue of material to different control account. It has no difference between both the systems. I hope you have understood. Similarly, going to wages. In non-integrated, what entry we pass when we make an entry into the wages? Wages control account debit to CLC. In integrated, CLC will not be opened. So the entry will be wages control account debit to cash or bank. Clear? So in spite of, in place of CLC, we have to credit cash or bank or creditor or debtor. That's it. Here, that is the major difference between integrated and non-integrated. Once the wages are paid, then the transferring of wages to different departments has no difference in both the systems. Both are same. Here, Similarly, so that means in integrated, CLC has no role to play. Direct, we have to make the entry through cash or bank. So, but the control accounts will be debited. Only in place of CLC, cash or bank or creditor or debitor or debtor will be debited or credited. Is it clear? That is the only difference. All right. So moving back to integrated. Yeah. So there is I hope you've understood. Costing profit or loss account, CLC account will not be transferred. In costing profit or loss account, we will not write cost ledger control account. We'll directly writing by sales. Clear? We'll be directly writing by sales. In costing profit or loss account, we'll not be transferring the sales through CLC. We'll be directly writing the sales. So entry will be the way you make the sales entry, how you make the sales entry. Debtors debit to sales. So the sales will directly go to costing profit or loss account. All right. So this is the entry. Cost and financial transactions are integrated. Let me just show you. Okay. So they are integrated, right? Raw material purchase. I'll just be telling you the entries and then posting is you can do. Raw material purchased. So now integrated, CLC will not be opened here. Raw material purchase, stores ledger control account. Remember, we are integrating. We are not making only financial accounts. We have to open a control account of cost accounting system also. So one account of cost accounting system and one account of financial account. I'm repeating. In integrated, one account will be of cost accounting and one account will be of financial accounting. So raw material purchase, you will not write purchases account. You will continue to write stores ledger control account. Stores ledger control account is important because from stores ledger control account only we have to issue the material for production. So if you will just write purchases account, how we will issue the material to different WIP or control accounts, right? So stores ledger control account debit to cash or bank or creditor, whatever. If it's a cash transaction, cash or bank. If it's a credit transaction, to creditor. I hope you've understood. So stores ledger control account debit and your cash or creditor, whatever the entry is, cash or credit, will be credited, right? So this is the way you have to write raw material purchase. Direct material issued to production is an internal entry. The same entry will be followed the way you were following the non-integrated. For any internal entry, there is no difference. So direct material issued to production, WIP debit to stores ledger control account. All right. So internal entry, internal transfers will have no difference. Clear? Direct material issued to production, WIP debit to stores ledger. Wages paid and charged to production. So wages paid, these are the total wages, and 30% is indirect. So total wages first you have to pay. So wages control account debit, wages control account debit, and cash or bank, whatever. Cash or bank credit, CLC. In place of CLC, cash or credit, cash or bank will be credited or creditor. Clear? So only difference is we have to replace CLC. We don't have to open CLC. Rest, everything will mostly remain the same. Clear? So both wages control account debit to cash or bank, wages charged to production. Again, now this is internal transfer, WIP debit to wages control account. So this will be debited and this will be credited. Internal transfer will have no change. Manufacturing overhead incurred, manufacturing expenses incurred. Again, it's an external entry. So manufacturing overhead control account debit to cash or bank. Okay? To cash or bank, whatever, howsoever it is incurred. Manufacturing expenses incurred, cash or bank. Charged to production, that means absorbed to production, will have no change. Same the way you were using the non-integrated. So WIP debit to admin overhead or manufacturing overhead control account. Clear? This is the internal transfer. It's absorbed to production. That means manufacturing overhead is absorbed to WIP always. Selling and distribution cost. First, it has to be incurred. Incurred means selling and distribution overhead control account debit cash or bank credit. So you have to first incur it, all right? And then the second entry, transfer it to cost of sales. You have to transfer it on your own, whether it is mentioned in the question or not. Selling and distribution has to go to cost of sales. It has to be absorbed, all right? If it is not absorbed, then it will leave a balance. Then you have to leave a balance carried down. Or better to transfer it to cost of sales, absorb it. So selling and distribution cost, you basically first incur it and then absorb it. Finished product at cost, same entry, no change. Finished products at cost, transferring to finished goods from WIP. Transferring to finished goods to WIP. Finished goods will be debited, WIP will be credited. Finished products at cost. Sales, nothing to be done. Sales entry, the total external entry. So it will be basically the way you do debtors account debit or cash account debit to sales. So this sales will go to profit or loss account, debit side. Clear? We have to make a profit or loss account. This is a balance sheet item. Debtors and cash account, we are not opening. It's a balance sheet item. We are just calculating the profit. For profit, we need the sales. So it will go to profit or loss account. So debtors debit to sales. Clear? CLC has no role to play here. Receipts from debtors, it's a total financial transaction. So cash or bank to debtors. It's a normal financial entry. I hope you know. Receipt from debtors means cash or bank debit to debtors account. It has no effect in the control account. In the cost accounting control accounts, it has no effect, but you have to pass the entry because we are following the integrated system. So normal financial entry we're going to pass. Payment to creditors, again, creditors account debit to cash or bank. Clear? So this is the way basically we do the integration. So if you understood the non-integrated, so always start with non-integrated. Clear? If you start from non-integrated, integrated is comparatively simpler to understand because you just have to replace the cost ledger control account with cash or bank or creditor or debtor or whatever. Clear? So we are integrating both the system and we have to continue maintaining the control accounts. So all those 9 control accounts, I said 9 because we don't open cost ledger control account. Clear? In non-integrated, we have to open 10 accounts. In integrated, generally we open 9 accounts. Cost ledger control account or general ledger account, we don't make. Clear? I'm just showing you. See, stores ledger for material purchases. Creditors are basically debited. We have not opened here CLC. If you can see, we have not opened here CLC. In place of CLC, we have opened to bank or creditors. Then this is an internal entry. No change. It remains the same. Clear? Whether integrated or non-integrated, it continues to remain the same. Wages paid. This is external entry. So this is an external entry. Now, wages are transferring, the indirect are transferring to factory overhead. It's an internal entry. Clear? No change. It will remain the same. So indirect will go to factory overhead and direct will go to WIP. So these are the total wages and one will go to, indirect will go to factory overhead and direct will go to WIP. So entry for payment will be with the total amount. Clear? Then factory overhead incurred with the bank account, no CLC here again, it's incurred. Factory overhead transferred to WIP, again an internal entry, no change. All right. Selling and distribution incurred, so through bank, and then it is transferred to cost of sales. Finished goods control account to WIP, cost of finished goods is transferred to finished goods account, again internal entry. Cost of sales, we are transferring the selling and distribution also to cost of sales. We always transfer. And finished goods also will be transferred to cost of sales. Once you will make the account, you will come to know how much finished goods are transferred to cost of sales. This amount will come from the account when you make. Okay. So basically, finished goods balance we transfer to cost of sales. Then the receivable from debtors. So debtors or bank account debit to sales. It's the total financial entry. It has no effect on control accounts. But you have to pass the entry because we have integrated both the system. So we have to pass the cost accounting entries also and financial entries also. Both the entries we have to pass. Bank account debit to receivables. So this is the sales entry. Debtors account debit to sales, and sales will go to P&L. Clear? Creditors debit to bank, so payment made to the creditors. I hope you must have understood this. Yes. Yes. Directly transferred to costing. Yes, very good. So I'm glad that now you are able to, grasp the concepts of cost accounting system. It's very easy. Once you practice it, it will be really easy to understand. All right. So we have done one cost accounting, and so this is one question. We'll be sharing the PPT with you, and you can practice the question again. And made you understand it's also an integrated system. I just explain you. You do it on your own. The solution is also there. So we'll be sharing you the PPT, and must practice all the questions in this PPT, very conceptual questions. So just I'm explaining you this illustration. You do it on your own. All right. So these are the balances we have given you. Stores ledger, WIP, finished goods, prepaid. All right. So these are the balances we have given, and you have to make these accounts. You have to make these accounts, but it's always better that you make all the accounts. Then only the whole sequence will be clear. Clear? So in spite of only these 5 accounts, I think you should make all the accounts. Then only the process and sequence will be clear. All right. So these are the transactions. So I'll just quickly explain you. Material purchased, you know the entry. Not CLC, it's integrated. Clear? Material issued to production, they are internal. It will go to WIP and it will go to factory overhead. Yeah, so this is the issue. And this is purchased through bank or cash, or basically creditor also. Material transferred between batches. So the control account will have no effect on this. From one job to another job, from one WIP account to another WIP account, it has no effect on the control account. Wages paid, again, this is the payment entry, external. This will directly charge to batches. That means it will go to WIP. Non-productive time of direct wages, non-productive will go to factory overheads. So non-productive wages will go to factory overhead. Direct wages will go to WIP. Selling distribution incurred. So incurred through bank or cash. Other production overheads incurred again through bank or cash, external. Sales, again, it will go directly to PL. Debtors debit to sales. Cost of finished goods sold. Cost of finished goods sold, internal entry. So COS debit to finished goods. Here, cost of finished goods sold, it will be transferred to COS from finished goods control account. Cost of goods completed and transferred. That means finished goods debit to WIP. Here, so first is cost of finished goods sold. It will be transferred to COS, and cost of goods completed into finished goods is a product of WIP. It will be transferred to finished goods account. Physical value of WIP. So this is the closing balance of WIP. Closing balance of WIP. Clear? So I've just explained how it is to be done. Absorption rate of overheads is given. So production overhead absorption rate is 150% of direct wages. This is direct wages. See, direct wages. So 20,000 direct wages, 150% will be production overhead that will be absorbed. That means 30,000. So production overheads which have to be absorbed to WIP, the amount will be 30,000. It's 150% of direct wages. Clear? And selling and distribution, you should transfer the full selling and distribution to cost of sales. Clear? So this is how it is done. Prepaid production overhead means that it was paid in advance, so it carries a debit balance. Prepaid production overhead means you have paid it in advance. So prepaid expense always have a debit balance. If you remember in financial account, prepaid expenses always have a debit balance. They are your assets. You have paid in advance. So it's a debit balance. All right. So prepaid production overhead, that means it's prepaid expense. It will carry a debit balance. All right. So students, I hope you have understood this. The solution is here. All the accounts are here. So you can practice. Finished goods, costing, profit or loss account. See, we have not written CLC here. We have directly written sales. All right. So this is how it is done. And just practice this question. I've explained you. We are moving to reconciliation. All right. So students, we have done a non-integrated system. We have done integrated system. Reconciliation is important in which system? Integrated or non-integrated? We have to do reconciliation because we have two different profits. We have cost accounting profit. We have financial accounting profit. So reconciliation is important, is necessary in which system? Integrated or non-integrated? Can I have an answer? Reconciliation of cost and financial accounts are done in which system? Integrated or non-integrated? Can I have an answer, please? Reconciliation is important in which system? Integrated or non-integrated? Waiting for the answer. Alok, you can do the entry of costing profit or loss account. It's just the transfer. Costing profit or loss account, the entry is just transferred. Yes, non-integrated. All right. Yes, because when we are making an integrated system, then already the accounts are integrated. In integrated system, we only calculate one profit. So when there is only one profit, there is no need for reconciliation. Reconciliation is important only when we make two profits. So non-integrated system, reconciliation is important. Reconciliation of two sets of accounts is possible. We make a memorandum reconciliation account. So how we make it? First, we have to make a profit or loss account as for financial accounts, non-integrated. And second, we have to make a cost sheet. I hope you must have done cost sheet by now. So how we make the cost sheet? Direct material, direct labor, direct expense, prime cost. Then we add factory overheads. We get the gross works cost. Then we adjust the WIP stock. Opening we add, closing we deduct. We get the works cost. Then we add admin overheads. We get the cost of production. We adjust finished goods stock. We get cost of goods sold. We add selling and distribution. We get cost of sales. Clear? So I hope you know the format of cost sheet. It is important if you have to do reconciliation. So in reconciliation, we have to calculate profit or loss account for financial profit and cost sheet for costing profit. And then we have to make a reconciliation. So let us just understand this. Students, quickly make a profit or loss account. Quickly make a profit or loss account. Let us make a profit or loss account. I hope you know how to make a profit or loss account. Debit all expenses. Trading and profit or loss, you can combine. Trading and profit or loss account, you can combine. So what all we will be doing in, and this question, if I'm not wrong, students, the question which you can see on the screen is the question which I think came in November 2022. Cost accounting system, the latest question from cost accounting system. This was a question which came in November 2022. So the latest exam in November 22, this was the question which came for reconciliation. All right. So a very good question, very conceptual question. So first we have to make a profit or loss account. All right. So in profit or loss account, first we have to make two opening stock. So the first entry, I hope you know how to make profit or loss account. Trading profit or loss, you can combine trading and profit or loss account, two opening stock. All right. So if I just make it for you here, profit or loss account, two opening stock. So this opening stock will come here. All right. Then raw material consumed. So two raw material consumed. This will come. So two opening stock, profit or loss account. Two raw material consumed, trading profit or loss account, please make along with me. Two direct labor, all will come on the debit side. I'm combining trading and profit or loss account. Two factory overheads. Two goodwill written off. It will come in profit or loss, not in cost sheet. Two admin overheads. You just have to debit all these expenses. Two dividends paid. Two bad debts. Bad debts, again, don't come in cost accounting. Bad debts don't come in cost accounting. Goodwill does not come in cost accounting. But we are making profit or loss first. We are making profit or loss account first. Two selling and distribution. Interest received. Buy interest received. It's an income. Buy interest received. Buy rent received. This will come on the credit side of trading profit or loss account. Buy sales. Clear? So debit side, the opening stock. And then all the expenses, credit side, incomes and sales, and closing stock also credit side. So closing stock of finished goods and WIP, both are closing stock. So buy and both the closing stock. Clear? So profit or loss account, to opening stock, to all the expenses, by income, by interest received, by rent received, and by sales. So sales and closing stock should come on the top of the credit side because it is part of trading account. By sales, by closing stock, and then by interest received and by rent received. So this is all for the profit or loss account. Can you tell me the profit? Can you tell me net profit? All debit expenses. So debit all the expenses and credit all the incomes. Yeah, so we have 4 items on the credit side, and these are all on the debit side. Can you tell me the net profit? Can you calculate the net? Very good, excellent. Who has calculated this? Very good, Aslam. Very, very good. Aslam has given and Aslam is saying, I have given the first correct answer. Very good. 67084. 67084 is the net profit. And yes, Aslam, I'm acknowledging it. You have calculated it really fast. So net profit is 67084. All the opening expenses, these all will be debited. These all will be debited and these all will be credited. So all the opening stock and expenses will be debited and incomes and closing stock will be credited by closing stock. All right. Net profit is 67084. Any other answer? Nobody else has calculated. Anybody else has calculated the net profit? We are doing the question of November 2022. 67084. Any other student calculated the net profit? Any other net profit? Any other figure? Has Aslam calculated it correct? Any other student calculated net profit? Shall I take 67084 then? Shall I take 67084? Shall I proceed? If this is the correct profit, let me see if Aslam has corrected. Okay. So this is the cost accounting information. All right. So this is the correct profit. You can see statement of profit, closing stock is credited. Other income, indirect income, they are indirect income. Okay. They are indirect income. So sales should always be at the top, then the closing stock and then indirect income. Again, opening stock should always be at top. And then all the expenses, direct and indirect both. Dividend does not come in costing. Bad debt does not come in costing. Goodwill does not come in costing. So this is the profit, 67084. Okay, Alok, Pranav, very good. So students are able to calculate the net profit as per profit or loss account. So this is as per the financial records. So the latest question we are doing and you're able to do. So halfway, almost 30% we are done, right? So 30% for financial profit, let us say 30% for cost profit and 30% for reconciliation. So we have 3 parts. Now let us make the cost sheet. Clear? Now let us make the cost sheet. And just want to erase it off. Okay. Clear. So let us make the cost sheet now. How we make the cost sheet? Start with raw material consumed. Start with raw material consumed, number 1. Raw material consumed, then direct labor. So raw material consumed, direct labor will give you prime cost. All right. Raw material consumed and direct labor will give you prime cost. Then to prime cost, add factory overheads. Now, factory overheads are given as per information. See, in cost accounting, we absorb the factory overheads. In financial accounting, we have used this overhead, 6 lakh. 6 lakh are incurred. But in cost accounting, we absorb the overhead. We don't post actual overheads. I'm repeating. In financial accounting, we make in the profit or loss account, we include factory overheads incurred. But in cost accounting, we absorb the factory overheads. We include the factory overheads or any overheads we use as absorbed ones, not incurred ones. So 6 lakh will not be included, but the absorbed ones. Factory, see the cost records provide. Clear? Factory overheads are absorbed at 60% of direct wages. So for cost records, for the cost sheet, factory overheads are how much? 60% of direct wages. Direct wages are 9 lakh. So 60% is 5,40,000. All right. So just add factory overheads. Factory overheads for cost sheet will be 5,40,000 and not 6 lakh. So to the prime cost, add 5,40,000. What you get after adding? Let me show you the cost sheet only so you understand. See, raw material consumed remains the same. Direct labor remains the same. We get the first landmark prime cost. We add the factory overheads to the prime cost. 60% of direct wages. We include the absorbed ones. Clear? So absorb factory overheads. Then we get the factory cost. Then we add the opening WIP and the closing WIP. It's given in the question. Opening WIP and closing. Closing we always deduct. Opening we always add. All right. Opening, I hope you know the format of cost sheet. Please practice the format of cost sheet before you do reconciliation. So those who know will be understanding it better. Clear? I hope you know the format of the cost sheet. Okay, very good. Yes, Aslam, it's 5,40,000. So in the cost sheet, to prime cost, we add factory overheads. To the prime cost, we add factory overheads. We get the factory cost. To factory cost, we add opening WIP and we deduct closing WIP. It's mentioned in the question. Now, admin overheads are recovered. Again, in cost accounting, we absorb. So there are 3 overheads. All the 3 overheads will be absorbed, not actual. We take the absorbed ones in cost accounting, not the actual ones. Actual ones we take in the profit or loss, but absorbed ones we take in the cost sheet. So admin overheads are absorbed at 20% of factory cost. 20% of factory cost. See. So this is my factory cost and 20% of, so 20% of basically 29 lakhs will be 597,333 will be admin. So to the factory cost, we add the admin overheads and we get the cost of production. So cost of production of 14,000 units is 35,83,999. All right. This is the cost of production. I'm repeating. Direct material plus direct labor, we get the prime cost. This is the first landmark. To the prime cost, we add the factory overheads. We get the factory cost, the second landmark. To the factory cost, we add WIP stock and we deduct WIP closing stock. It is given in the question. Same for both financial and costing in this question. So no change. Factory cost of goods produced. So this is the third landmark, the factory cost. We add the admin overhead. So absorption rate is 20% of factory cost. So we have added the admin overheads to, see, it is in sequence. It is in continuation. The whole cost sheet will start from raw material and will end in profit or sales. All right. Then we get the cost of production. So this is the fourth landmark, the cost of production. To the cost of production, opening stock of finished goods. Do we have opening stock of finished goods? Yes, we have opening stock of finished goods. We have to add the opening stock of finished goods is valued at 208 per unit. 208 per unit. Now, how much are the goods produced? See, if we can see in the question. Closing stock 375, sales are 14,500. 14,500 are the sales and we are left with 375 as closing stock. So add both of them. 14875 is the total. Minus we had 875 as opening. We are left with. That means the current production is 14,000 units. I'm repeating. 14,500 we sold. 375 we are still left with. That means total should be 14,875. Out of this, 875 was from the opening stock. All right. That means current production is 14,000 units. The current production is 14,000 units. That exactly is given here. So cost of production, the fresh production is 14,000. So the cost of production for 14,000 is 35,83,999. And on the basis of this, we have calculated the closing stock. So closing stock for 375 units. Closing stock is 375 units. And closing stock, we don't take this. This is not to be taken in cost sheet. For cost sheet, we value the closing stock of finished goods. I'm repeating. For cost sheet, we value the closing stock of finished goods on the basis of cost of production. I'm repeating. Closing stock of finished goods given in the question is only to be taken to profit or loss account. For cost records, we have to calculate the value of closing stock of finished goods on the basis of cost of production. So if the cost of production is 35 lakhs for 14,000, how much it would be for 375 units? That means the closing stock. So this is the value of the closing stock and production cost of goods sold. So cost of goods sold, the cost is 3670. So we actually added 35,83,999 plus opening. Opening stock is missed here. You have to add the opening stock of finished goods. 148750. We have to add it. All right. And then, all right. So cost of production of cost of goods sold is this. Selling and distribution overheads 8. How we are absorbing it? 8 per unit sold. It's 8 per unit sold. All right. So selling and distribution is absorbed at 8 per unit sold, and units sold are 14,500. So this is the total cost of sales. Sales, we know how much is the total sales. Sales will remain the same. These are the sales. So if we deduct the cost of sales from sales, we get the profit. So this is the second step we have done. 3,74,000. All right, will be the profit. 14,000 units. Kavita, I just explained 14,000 units. See, I've just explained here. You have to calculate the cost of fresh production. How many units the units were purchased. All right. So the sold units, let me just explain you in a different way. This is important. All right. How to calculate the fresh production? See, opening stock plus production minus closing stock will give you the sales. Clear? We have the sales with us, 14,500. We have the closing stock with us, 375. We have the opening stock with us. I'm talking about units. You have to calculate the production, the units you have produced. So the main format is opening stock of finished goods plus production minus closing stock of finished goods. So the left are the goods sold. Clear? Goods sold, the units of goods sold are given. Closing stock is given. We don't know the units produced. Opening stock is given. So work backwards. 14,500 plus 375 and minus 875. You will get this answer, which will come out to be 14,000. Clear? This how it has to become. You have to calculate the units produced. Clear? So sales plus closing stock minus, we just reverse the signs when we work backwards. When we work from top to bottom, plus and minus. When we go from bottom to top, we reverse the signs. Clear? This is a normal mathematical setup. So this is the way we do, and we find the missing figures. So this is how we found cost, the units produced. All right. I hope you have understood. Okay. Yeah, so this we have calculated the cost profit 374, and we have calculated the 1 minute. Okay. So this is my cost profit and this is my financial profit. Now we have to reconcile. The third step is reconciliation. We'll start with cost accounting profit. We are reconciling the cost profit with the financial profit. Now, the main fundamental what you have to keep in mind is you should always think that profit as per financial accounting is correct. Clear? So whatever we have done in the profit or loss account, accordingly we will adjust the cost account. For example, admin overheads. In financial accounting, we charge 590. In cost accounting, we charge 597. So 7,333, we have charged extra. We have charged extra means we have increased the cost. Here, we have charged the extra cost. So add it back. Add back any extra cost which is charged. We should have charged 590 as per profit or loss, but we have charged 597,333 in cost accounting. So 7,333 we have overcharged. So just add it back. That means we have excessively charged to the cost. Add it back. Opening stock is overvalued. So in opening stock of finished goods, we should have charged, how much was the opening stock of finished goods? Here, opening stock was 148,750, but in cost accounting, we have charged 182,000. So opening stock also. So if we have overcharged the debit side, add it back. I'm repeating, if the debit side, that means the costing, the expense, whatever comes on the debit side is overcharged in cost accounting, add it back. Clear? And whatever the debit side, the costing or the expense part, we have undercharged, deduct it further. That's it, the whole concept of it. So whatever you have charged extra, just add it back. Clear? Interest received was there in profit or loss, but it was not there in cost account. So you have to increase the profit. So just add it back. So this is something which was not there in cost accounting. You have to add it back. You have to increase the cost accounting profit also. Because this was added, the other income was not added in cost profit. The other income, we have to add my cost accounting profit further. Clear? Less. Now, what is less? Factory overheads undercharged. We should have charged 6 lakh as factory overheads, but we have charged 5,40,000 only. So that means 60,000 extra to be charged. So that's why we have deducted. Clear? Selling and distribution also, we should have charged 122, but we have charged only 116,000 in cost accounting. Do whatever is done in profit or loss, as simple as that. If profit or loss account, the cost is greater, you just deduct it further. Clear? And if in the profit or loss, the costs are less, you just add it back in the cost profit also. So do as is done in profit or loss account, because you have to reconcile both the profits. Clear? Selling and distribution, you should have charged 1,20,000 in cost accounting. You just have charged 1,16,000. You have charged 6,000 less. So charge it further. Charge means further deducted. If you will further deduct it, you will reduce the profit. Closing stock overvalued. All right. In the profit or loss account, closing stock was 82,500. You have charged as 96,000. See, you have charged at 96,000. You have overvalued the closing stock. So deduct it. Clear? Closing stock has increased the profit. Deduct it. Goodwill written off, this loss has to be provided in cost accounting. You have not provided it. Dividend paid, charge it to cost accounting also. You have not charged it. Bad debts, charge it to costing account. You have not charged it. So once you will add all these things and deduct all these things, you will get the financial profit. So this is how we do the reconciliation. The main concept is do as it done in profit or loss account. Whatever is the expense in profit or loss account, bring your expense of cost accounting match to that. All right. Any income which is charged, which is credited in profit or loss, add it to cost profit also. Any expense or loss which is charged in profit or loss, you have not charged in costing P&L, in the cost accounting records, you just charge it by way of deduction. So do whatever has been done in profit or loss. Bring every amount, whether you have to do plus or whether you have to do minus, bring every amount to the amount of profit or loss. You have to match the amount of profit or loss. So just think that profit or loss is correct. Every amount of profit or loss is the base. and you have to reconcile, you have to change the cost accounting profit according to profit or loss account, expenses or incomes. This is the main setup. So take P&L as the base and take changes. Do changes in the cost profit accordingly, and the final result will be the cost accounting. The financial profit and the cost accounting profit will be reconciled. So this is how it is done. Students, once you will, opening stock should also be taken as given. Yes, opening stock was missed in the statement, but it has been taken to 208 per unit. All right. So opening stock has been taken, but it is missed in the question, but it is taken opening stock of finished goods. So this is how we do the reconciliation. I'm just repeating. We have taken here in the cost accounting record, do whatever has been done in the profit or loss. If I have overcharged any cost in cost accounting, overcharged it, minus it. If I have not charged anything, charge it. Clear? And if I have not added anything, just add it. So these are the things you have to just follow profit or loss account. So if I have overcharged in cost accounting, reverse it. If I have undercharged in cost accounting, add it. Clear? If I have not subtracted anything, subtract it. If I have not added any income, add it. Clear? So just follow the instincts of your profit or loss account. Do as it is done in the profit or loss account. All right. So there's another question for your practice. Do practice this. Again, the question extracted the transactions. It's a combine of financial and cost. So this is the illustration. You have to make the profit or loss account first. Then you have to make the cost accounting, the cost sheet first. And then you have to make the reconciliation. Clear? So an extra question for practice. We'll be sharing you with this PPT. Have happy learning, happy studying. I hope you have understood the cost accounting system and the illustrations. Do practice them again. Make all the ledger control accounts. I hope you'll be able to do it. All right. Practice a lot. And we have done the latest question also. So this, how the pattern is there, and you will understand how the question comes and what is expected out of you. All right. So good practice questions, lot of happy learning, happy studying. Thank you, students. That's all for today.